Hello and welcome to another episode of Darwin Investors. We got a couple of things to get into today. First of all, we'll get into really quickly, we'll cover the inflation data and just kind of talk about the reason why the market was up and down so crazy today. And then secondly, and more importantly, we're going to talk about stock downgrades and what that means for the stock. I mean, people overreact to this. I don't want the viewer here to overreact to a stock downgrade. Let's take a look at what it really means. And historically, are the people that downgrade stocks, are they right or wrong? So the one guy downgraded the whole entire stock market. The whole thing is coming down. So let me go ahead and share my screen and we'll get right into it. So today, from the Bureau of Labor and Statistics, CPI data came out. And what we're finding out is that it was 8.5% year over year. I think it was like they're saying it's the highest rate since, highest increase since like in 40 years or something along those lines. We have a 1.2% increase on all items. Food stayed stable. Food away from home was a little bit high. But here's where we're really going up. It was the energy prices, commodities, gasoline, fuel, and oil. No surprises there. Used cars and trucks actually came down. So that would probably be because people can't afford to go out and buy as many cars and trucks right now. We're busy buying this stuff over here, so it's only logical that other things are going to take a beating. One thing that I was surprised to see was that shelter had not yet come up, and gas prices are coming down. Gas services are coming down. So when we look at the reason why the market was up and down today, when we look over here at Yardeni's research, this is the reason why the stock market was so strange today. It went like straight up beforehand, and that's because Yardeni said that inflation should moderate this year. That the headline PCED inflation rate was 6.4% during February. We forecast it will peak between 6 and 7% by mid-year before falling to 4 to 5% during the second half of 2022. And next year, we expect it will slow down to 3 to 4%. So on this positive or optimistic or upbeat news from Yardeni Research, which is well respected in the investing community, the stock market had a really good pop today. But when I look at this inflation data here, we're looking year over year. And we look at this line and the way it looks here, and the way that you get this data is like this. So you just take your little calendar or your calculator out here and you go 287.78. So what was that? 287.708.708, and you divide that number by a year ago, and this is how you get your inflation data year over year, by 265.028, 65.028, and you'll see that the inflation was 8.5%, just like it was reflected in the Bureau of Labor Statistics. No surprise there. So we got a pretty good steep incline here, but when Yardeni is saying it's actually going to come down in the middle of the year, it's pretty flat here. So if it's flat here and it's steep here, it's going to go up more, not down more, but we'll see how that all shakes out. Again, I don't really invest in stocks and decide where to put my money based on this sort of thing, so to speak. A little bit more, I'm probably going to hedge my portfolio in general when the opportunity presents itself. But right now, I wouldn't expect that the inflation is going to come down through this part of the year unless this really flattens or comes down in some way. So let's go ahead and talk real quick about downgrades of stocks and why they affect the stocks and what would happen if you just automatically sold every time something was downgraded. So Nvidia here drops as bears downgrades on worries over order cancellations and slowing PC demand. So suddenly we're going to have too many semiconductors, I guess. I'm old enough to remember when there was a semiconductor shortage, but apparently now there's too many. But there's a different kind of semiconductor. These guys do what they call discrete graphics boards, or basically you got two different things. You got discrete and you got integrated. An integrated graphics board would be like what Intel does, and it's like part of the system, and it's like tied to the CPU and that sort of thing. And then there's discrete. Discrete would be like a standalone graphics card, and that's what NVIDIA makes. They make discrete graphics boards. They're basically their own little CPUs, but they're graphics cards. And actually the NVIDIA graphics cards has an integrated chip in it called Tegra, and they actually now make discrete chips for data centers called Grace, and they're actually ARM-based chips, so they're really quick. But I digress. Okay, so NVIDIA drops its bear downgrades on words or cancellations. So if you look at this actually happened on the 11th here. So if you look at NVIDIA's stock price since the 11th, it went there it was, and then the market opens on the 11th and slam, and it's down 6.99%. We say, well, that's because the NASDAQ is down in general, and it is, but the NASDAQ is only down 2.5%, whereas NVIDIA is down 7%, and that's due to this downgrade right here. Well, what's a downgrade and what does it mean? Well, it doesn't really mean a whole lot, if I'm honest. You just, like it says, the advice from the Motley Fool here is just take downgrades with a grain of salt. It's important to keep in mind that a downgrade is simply a change in a particular analyst's opinion about a stock. And so you're just taking one person's opinion about a stock and then selling off, you're going to lose out on a lot of gains. So if you look at NVIDIA over the years, would see that betting against NVIDIA is not, historically, it's just a bad thing to do. You don't want to bet against NVIDIA. And a lot of other big stocks, this is not like betting against a penny stock. You don't want to bet against NVIDIA. So here's a downgrade of NVIDIA back in June of 2014. And this analyst from Bank of America, Adam Gonzalez, downgrades the stock. And what he said was Gonzalez's argument in the downgrade went from neutral to underperform were the following: expectations of sales growth to slow 3% to 4%, down from what was projected to be 9% in 2015 and 2016. A peak of 55% in gross margin, 15% in operating margin, and a stretch valuation. Sound familiar? Well, they grew last year by 65%, so you can see that Adam Gonzalez here was pretty off in his forecast. And you can also see that this came from June of 2014. And if you had actually taken Adam's advice here and been, and looked at this and you just sold everything, and you look here from June of 2014 to now, you'd have missed out on 52,348% gain. So you don't necessarily want to go selling stuff just because an analyst downgrades it. And to bring it a little bit more recent than Adam Gonzalez here, this is from 2017, why NVIDIA Corporation stocks is becoming a battleground stock. And basically, they're saying they question the valuation. It's pulling back sharply. That the stock is really expensive at 36 times. The bears are awakening, and you should get rid of the stock. This article is saying that, or be really careful. And this was in March of 2017. So if you just done that in March of 2017, which conveniently enough is about 5 years ago today, actually, is it? You would be down 745% if you'd been scared off by that article. And so with every bad article, there's also something that's going to be, that's going to be a counterweight to that. And oddly enough, it's the Motley Fool again. Motley Fool actually was like, don't panic, this is a good stock. And they're doing it again, saying that there's a massive green flag for NVIDIA's future. Basically that they're sitting on a huge gaming business. They're the clear industry leader, and they basically barely even tapped into the business of the cloud gaming space. But where the cloud gaming space is tapped into, they are the dominant force there and only getting larger. And so what they say here, the takeaway message here is NVIDIA is dominating this nascent gaming niche. And of the $1.6 billion in revenue last year in the niche, NVIDIA got $1 billion through GeForce Now. Essentially, they allow you to download games off the cloud and play it right there with NVIDIA. So they own nearly 63% of the market, with a $14 billion is expected by 2027. Right now, it's only $1.6 billion. So they see a large growth one way ahead. Plus, NVIDIA's gets a large amount of their revenue from gaming, and that's good news for investors, as the gaming segment produced 46% of NVIDIA's total revenue. So this article is bullish on NVIDIA, but NVIDIA is taking a beating after the analyst downgrade. But I would just caution people to overreact, because betting against NVIDIA historically has been a pretty poor move. And here's another one here. UBS cuts the Microsoft price target amid weak demands, FX headwinds. This was in March 16th of 2015, and they cut it by $3 to $49 a share. Did that Microsoft? They're like, hey, look out, Microsoft has got some headwinds. But despite all that, they still gave it a buy rating. So they downgraded, but they didn't tell you to sell. They're telling you to buy. So this would be an example of a downgrade, but they're not telling you to sell it. But more often than not, people sell. And so again, UBS comes out on Monday again. Microsoft tumbles as UBS suggests Office 365 could see gentle deceleration. And again, if you had just looked at this in March of 2015, sold your Microsoft, you would be down, let's see here, you would have missed out on about 577% in gains, even though they never told you to sell it. But some people looked at that and they sell and they got rid of it. And the same thing's kind of happening right now with Microsoft. So again, betting against Microsoft has never been the smartest thing in the world to do. There's an analyst back in the day in 2017 just downgrading a lot of the stocks in the NASDAQ because it bounced up to the lofty levels of 8,600 points. And so, but they didn't downgrade everything. They upgraded Workday, GoDaddy, and Zynga. But they downgraded Apple, and they downgraded Qualcomm, and they downgraded NVIDIA, Texas Instruments, Taiwan Semiconductors. So again, this is not like, this is a grain of salt sort of thing. Please, I just urge you, don't go like selling everything just because you see your stocks crashing because of an analyst downgrade. And it's not just restricted to tech stocks. Here's B of A again. Remember, they were the ones that downgraded NVIDIA as well. Here they are downgrading the transport stocks on deteriorating demand. Now, apparently, now we don't have a supply chain. I remember when we had a supply chain problem, and now we don't have one at all because there's just not enough demand to keep the supplies chain running. So Bank of America downgraded several transportation stocks ahead of opening Friday, citing deteriorating demand and falling prices. And so one of the stocks that they downgraded was UPS. Now UPS is a stock right here, is trading at an all-time, I can't find it cheaper than a PE ratio of 13 times. And nobody trades a little bit more expensive than that. So we're talking about a stock that is trading at a historic low, and yet it's being downgraded at the same time. I mean, you gotta imagine it doesn't make much sense to then go ahead and sell your UPS. So if you look at it here, it's trading at PE ratio, a trailing 12 months actually, of 12.99. And I don't see another one close to that. Oh, here we go. Never mind. It's not all-time low. It looks like in November of 2011, it traded 11.25. So 11 years ago, it was cheaper. But up until then, between 11 years ago and now, it's never been cheaper. Now it's being downgraded. So again, I wouldn't overreact to some of these market downgrades. Just make sure that you've got a good company and that you're holding on to. Now, I wouldn't be averse to like, if you're going to trim your position and kind of move in something a little bit more favorable for today's inflationary environment, especially as I see the inflationary environment is going to persist, probably more so than Yardini thinks it is. But we'll see. I hope they're right. Noticed that a lot of the other discretionary spending was coming down. So it could be that inflation really is going to come down despite, a flattening line in the middle of the summer there. From last year, our comparison is not going to be particularly favorable for us. But I hope they're right. So yeah, that's a wrap for tonight. If you got anything on this video, please like, subscribe, and hit that little notification bell. Until then, we'll see you next time. Bye.